Hi, welcome to the Market Alert for Monday the 3rd of October 2016, looking at Friday's trading day, which would have been the 30th of September. So what a day. We started off with Deutsche Bank going down to 981, and then we saw a complete reversal on the market moving back to the highs. And the reason for this, of course, rumour rescues Deutsches from banking bloodbath, but gold top stocks in September. Nothing to see here. Move along. And there's plenty more like that as well that were out and about on Friday. So again, stocks soar after French press confirmed Deutsche Bank near settlement with the Department of Justice over the 14 billion. They were going to bring this down to 5.4. Now I know that all fines are negotiable, which is bizarre, but apparently they are. And of course, as they're a bit strapped at the moment, they're looking for a deal. It still hasn't been confirmed, although the front page of the Financial Times yesterday had this as their headline. But we won't find out until tomorrow, which obviously I'm recording this on Sunday. When I mean tomorrow, I mean Monday the 3rd. But also keep in mind that it's a long holiday weekend in Germany this weekend as well, which is generally always consistent with the bank problem. You get the extra day, you can keep the banks closed, etc. if you need to. Not that they are at this point, but just something to keep in mind. That's why they're called bank holidays. So all of this news, and again later on in the news, the market closing da-di-da-di-da. But while I'm talking about Deutsche Bank still, we've made the news already during the weekend, October the 1st, Zero Hedge putting this out. Deutsche Bank charged by Italy for market manipulation, creating false accounts. Several former directors of Deutsche Bank have been arrested with fraud in the Italian banks. It's not like the Italian banks, when they work for Deutsche Bank against the Italian banks. So really it doesn't end for Deutsche Bank. The problems continue. It's a massive story at the moment. It's too much to actually go into detail in just the market alert, but we've got a situation where just one day after Deutsche Bank stock soared from all-time lows on the back of what appears to have been a fabricated report. Sources by the AFP have relied on Twitter to inform it that the Department of Justice would reduce the RMBS settlement with the German lender today. And that came from Bloomberg. But, well, let's wait and see. But the problems are not over by a long shot. Any denial is generally confirmation of a problem, is how I see it. So the markets on Friday, let's just go to the pre-market session. We had the low in Deutsche Bank and then the Dow trading up 150 points in the pre-market. And then we get to the the main session. We go through the first part and we have the first trade there. I'll just wind this back so you can see it. So we've got the first trade. Let me just grab hold of this one, move it back a bit faster. So we had the first trade and the market going up to the scalp, and then we had a second trade, the market filling this. Now this was a bit of a hairy one because they hadn't released at this point that they were going to reduce the final. The rumour hadn't started, so eventually then we see the market spike and trade up and then continue to trade up as well. You can see they're sitting on 63 points profit at this point, and that's when I sent out a note and said, look, there's a rumour. And I'm just going to go back to the chart here, and you can see there where we had this big jump in the chart and moving the price to the upside there. And this is more or less where it ended for a while. The market then traded sideways. Deutsche Bank closed, or the share dealing closed in Germany, I should say. And then we had just another trade earlier on in the evening that moved higher as well. But I didn't trade that one. As I said on Friday, happy with what we'd already got out. And then the market after just plunged, which is quite strange. Just as it got to the close, the market dropped over 50-60 points, no doubt with the realization that it all might be a complete and utter fraud, i.e. it was just a rumor with no facts. But again, we won't find out until the market opens on Monday. So yeah, very interesting picture developing. Go back to the daily chart, you can see a straight reversal on Friday. The volume isn't anywhere near as great as the sell day the previous day, and again, I don't have to remind you what I keep saying about this. The sell days have higher volumes than the buy days. Good indication there that there's more sellers than buyers, and obviously assistance by the Fed to hold this market on the highs. News wise, let's have a quick look, see if I can grab some news for you. So Germany's closed, and Monday, what have we got? ISM manufacturing, that's only one out, high impact news item. Previous was 49.4, 50.4 is the forecast. So this trending down as well. An interesting picture there. And then finally, 1166 on the implied volatility. No doubt this was higher during the first part of the session with the prospect of Deutsche breaking 10 euros and then rallying back. And then this obviously coming back as the market then turned around and moved sharply higher. Also want to leave you with this, if I can find it. I probably won't be able to find it, but I've actually got the video already queued up in the timeline for you. But Rick Santelli of CNBC used to be a floor trader, and I do like Rick. He says it as he sees it. He's sort of a lone voice in the wilderness, as it were. Not too dissimilar from myself, but I can't find it. But anyway, oh, here it is. Here we go. Furious Rick Santelli rages at Janet's jawboning. Please don't help anymore. It is just brilliant. It's 3 minutes. It's at the end of this video, and I suggest you watch it because I share his frustration, irritation at what the central bankers are doing. They are absolutely destroying the financial system as it is. There's no fair value anymore, no price discovery, because of the manipulation by the central banks of just printing endless debt for generations to come. And if you've not seen the debt video that I recorded, then have a look on the site at that as well, because it just sums up everything that's gone on since 2008 really to the present day, and the madness continues. So that's it for today. Say enjoy Rick's video. Shares the same frustration and irritations, as I say, sort of end on a light note. Anything that comes out tomorrow, of course, with regards to Deutsche Bank, I will let you know via email, and I suspect the markets will open fairly steady tonight unless something has come out to actually rock the boat before they open. But other than that, I would expect more or less where they've traded to on Friday, but a bit of a weakness around as well, as the market will need another rumour to move higher. So I'd expect some profit taking from Friday.
As I look up the board, I see a 159 in 10-year, important level, top of an important range. But really what it means is, at least for today, there's an all clear. You know, there are many lessons to be learned from Deutsche Bank. And I'm not really talking about the ones that you, the viewer or listener on the radio, may be thinking of. My lesson is central banks. Now, I'm not here to say that they've had bad intent. I think all central bankers truly want to help. But please, don't help anymore, okay? Let's think about this. So, they're bailing out the system after the credit crisis. And what we've had since are years and years of digging more help, finding more help, looking for more free help, easy money. How's it really helped anything? I'll use the same analogy I've used for years. You can't wallpaper over termites forever, okay? Deutsche Bank has plenty of issues we don't need to get into. But one issue that's going to affect not only Deutsche Bank and the European banks, it's going to affect the Japanese banks, the emerging market banks, and our banks, is the fact that the more negative interest rates prevail, the worse profitability is going to be. But it can get worse. And I'll tell you why. Do you think the Swiss National Bank or the Bank of Japan, or even with regard to corporates, the ECB, the other two were stocks, central banks buying into markets? You really think that's a good idea? Let's use Deutsche Bank as an example. Let's say the stock of Deutsche Bank keeps going down. The cocoa bonds keep converting into equity. Everybody keeps blowing it out. What if the central banks all get together and decide, well, okay, we don't want that to happen, let's buy Deutsche Bank? Or when any other bank or company is in trouble, we'll buy that. Or as you get to political highlight points like election times, you want to keep everything pretty clean, make sure nothing goes down. Is that the world we really want to live in? Here's where I'm going with this. Janet Yellen recently, and it's all over every blog and every tongue of every trader, is considering the costs and benefits of doing things like other central banks, maybe buying equities, maybe buying corporates. It's a bad idea. It's not only the fact of who gets to pick and choose, it will completely and utterly, in every possible way, destroy any value in the marketplace. Completely. It'll be a useless investment. What good is it without price discovery, without people getting together and using the markets to either add to risk or dispense of their risk to actually get a large group of individuals, whether in a group or on an electronic platform, to bid and offer and come up with a true price reflecting the fundamentals of whatever they're trading? A backstop by central banks is not only horrible, and the final joke here is that in order for Janet Yellen and company to do any of that, they would go and have to get permission from Congress. I will just leave it at that. Think about that congressional hearing. Back to you.